Okay, welcome guys. Welcome to this Peep Show. We are Monday the 30th of March 2020. Sylvain again with you today for a new Peep Show for new live. The live today is named "Is the stock market rebound already over?" This is the question we are all asking ourselves. The stock market and the US stock market is opening in less than 27 minutes from now. Is it already over? So we had a pretty I would say aggressive year. The stock market was down and is down more than 21% year to date. If you look at the S&P 500 index, this is from CNN, you will notice that the S&P lost 25% of its value since the first January 2020. We are right now, I would say, at the middle point. Okay, so this is now or never for a rebound. The US earnings season starts in less than, I'll say, 15 days. So mid-April we will have the first US companies publishing their financial results for the first quarter. We will see if the financial impact of the coronavirus, but also of, I'll say, the global quarantine and lockdown around the world, as if those measures add a huge and I would say negative impact on the US economy. And the question is not to see if the impact is bad or not. We obviously know that the impact will be severe, but we want to know how bad it will be. One of the first element of this situation will be the NFP that will be published this week. So this Friday, like all the first Friday of each month, we are expecting the NFP to be published in the United States. So the NFP stands for non-farm payroll. So basically, those are the jobs created in every sector except the farming sector, and we are willing to see if those numbers are okay or not. Previously, we had 273,000 of jobs created, excepting in the farming sector, and we are now expecting a contraction of that number, and we're expecting minus 100,000 jobs created. So basically, no more jobs added, but also jobs that were deleted, that were suppressed because of the coronavirus crisis. So this is what we are all waiting for. So the end of this week will be crucial, and we also need to see what will be the impact and how will market operators basically will move during the start of this week. So this week will be very interesting to see. If you look also at the US oils, this is something that we discussed a lot during the last trading sessions. As I told you guys, for me long term, for me on the long term, we can't have a bullish trend on the US equity market, but also on the global stock markets, if we have energy and oil prices going down. Okay, so basically energy and oil prices going down definitely means that a lot of companies will shut down. And by a lot of companies will shut down, I mean companies that are exploiting oil, companies that are doing business with companies that are exploiting oils, but also companies that are financing those companies. So the companies that are producing oils, etc. So banks, financial institutional investors will also have a lot of default, a lot of stress coming from that energy sector. So that's why energy sector down. I don't see any room for a sustainable rebound on the US equity market. So that's why. And today we are starting the week with a pretty impressive week. We start the week with a minus 6.3% on the WTI price. So that's basically crazy. So that's crazy because since the 1st of January 2020, we had $63, $64, $65 per barrel. We were fearing that there was maybe a war going on between the United States and Iran, and now we lost almost everything. So basically, if you look at the value of oil, we lost almost 70% of the price of the barrel. So that means also a lot of revenues from oil companies that will be definitely be lower. Some also projects will default, and those things will have repercussion on the economy, on the financial institution, on institutional investors, and also on small and medium companies. The companies that were not strong enough to survive to this crisis will not survive, and this is something that is that is very, 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 I would say, very dangerous for the market. So 2008 we had an energy crisis. 2015 we had, 2014 we had an energy crisis. And remember what happened to the stock market during 2014 and 2015. We had a lot of stress on the equity market. This is the same now. Okay. And if we look at the technical configuration alone, technical configuration is not something that will if you look at the technical, it's saying that we are going here, but it's not. It's impossible because we cannot go below zero. But we are here on very low levels. So those levels, $20 per barrel, is an historical level. So so oil is cheap and is very, very cheap compared to its underlying value. So now the real question is, can we sustain an oil at this price on the medium term? And if oil stays at this level on the medium term, what will happen? And now there are some discussion between the OPEC plus countries, Saudi Arabia, also the United States. There is another meeting between those countries being scheduled for June. So in June we will have more answer to if they cut the production, the oil production in the United States or not, which country will reduce its production, to what level, etc. So we are now waiting for OPEC countries to take action, and we'll see what will happen. So this is definitely something that needs to be to be monitored, and also on the currency market. So let me show you the euro against the US dollar. So if you look at what is happening right now on the euro dollar, we have a totally neutral situation, I would say. So basically we had a highest point that was touched here at 114. We had a lowest point that was touched here at 106. And this is the medium point. This is I would say the average value of the euro dollar on a daily basis. So there is no discrepancy here to exploit. The euro dollar is at the level it should be. So we will have, I think, a trading range that will be in place for many weeks. And also on the gold and the precious metal market, this is something that is and that needs to be shown. We had a crash on the gold value. Now gold is back at its highest level. So $1,618 per ounce is now the value of the gold, and we reached the highest price of the gold in many years at $1,700 per ounce. We are almost back at this level. So that basically means that the market is more stressed. And if you look at the bonds and bond prices, the situation remains very, I'll say, very tense right now. Okay, we don't have like we used to have, like this situation where in 2016-17 the rates were going higher because the interest rate of the Federal Reserve were going up. So now we are back to a zero interest rate world. So bonds are not offering the same rates as they were. So the only investment vehicle, one of the only investment vehicle that is very interesting for now should be the equity market. But also the equity market is not that bullish because there is so much going on in there. People are keeping cash in bonds and using it as a cash vehicle. and everyone is waiting for for the right timing to enter into the stock market. Some people already had, and some others are still waiting. So we'll see. The market is opening in 17 minutes, and this is something that we will see. For me, is the stock market rebound over? For now, it will be difficult. So we need definitely to, for example, on the Dow Jones, to break today the 23,000 points to go to the 26,000 points. If we don't break it really soon, there is more room for down potential, and maybe be back at the 18,000 points level on the Dow Jones, which will be backed by low energy prices. Okay, it will make sense for Dow Jones to further lose point and ground on that argument. Okay, guys, if you have any questions, feel free to ask your question on the YouTube channel. Don't forget to subscribe. We also created the Arya starter pack, so the link is on the description. Feel free to hit and to subscribe to the Arya starter pack to get access to our whole trading ecosystem, with learning, with also discovering how the automated trading can help you achieve your goal. And we see each other tomorrow for a new Peep Show. Have a nice day, guys. Bye bye.